Are you scared right now? Are you lying awake at night worrying that a stock market crash, inflation, or economic turmoil is going to wipe out everything you worked 40 years to build? If you are at or near retirement, I get it. You do not have 30 years to wait for a beaten-down portfolio to recover. That fear is real, and the companies selling Gold IRAs know it. Everywhere you look on television and the internet, you see slick commercials telling you to roll your hard-earned 401k or regular IRA into physical gold to protect your retirement. They play right on your anxieties, telling you that paper money is worthless and that gold is the only safe haven left. But before you pick up that phone and move a single dime of your nest egg, I need you to sit down, listen to me, and understand what a Gold IRA really is versus a regular IRA. Let us start with what a regular IRA actually is and why it has been the backbone of retirement planning for decades. When you open a regular IRA, whether it is a traditional tax-deferred account or a magnificent Roth IRA, at a major brokerage firm like Fidelity, Vanguard, or Charles Schwab, you are putting your money into a low-cost, liquid, tax-advantaged account. Inside a regular IRA, you can buy stocks, low-cost index funds, exchange-traded funds, mutual funds, treasury bonds, or high-yield money market funds. What does that give you? Growth and income. When you own great American and global companies through broad market index funds, those companies generate revenues, produce products, pay dividends, and reinvest in their growth. If you buy bonds or money market funds, they pay you interest. Furthermore, standard IRAs have virtually zero administrative fees today. You do not pay annual storage fees, you pay zero commission trades on standard stocks and ETFs, and your money is completely liquid. If you need $10,000 tomorrow to fix your roof or pay a medical bill, you sell a portion of your liquid fund, transfer the cash to your checking account, and you are done. Now, let us look at what happens when you buy into the hype of a Gold IRA. A Gold IRA is a specialized type of self-directed IRA that allows you to hold physical gold, silver, platinum, or palladium bullion bars and coins inside a tax-sheltered account. Sounds safe on the surface, right? But here is what those high-pressure salesmen never tell you in those late-night television commercials. First, the Internal Revenue Service does not allow you to take that physical gold home and store it under your mattress or in a safe in your closet. If you do that, the IRS treats it as a full distribution, taxes it as ordinary income, and hits you with massive penalties if you are under age 59 and a half. The physical metal must be stored in an IRS-approved third-party depository. And that brings us to the biggest problem with Gold IRAs, the hidden costs and fees that erode your wealth. When you set up a Gold IRA, you are paying setup fees to the specialized custodian, annual administrative fees, annual storage fees to the vault, and insurance premiums to protect that physical metal. On top of that, there is a massive dealer markup, known as the spread, when you buy the physical coins or bullion, and another markup when you go to sell it back. You could lose 10 to 20% of your investment value the exact moment you execute the transaction just to cover dealer markups and custodial fees. Second, physical gold produces zero income. It does not pay dividends. It does not pay interest. A gold bar sitting in a vault in Delaware just sits there. It only grows in value if someone else is willing to pay you more money for that same piece of metal 10 years from now. When you are retired, you need income. You need cash flow to pay your light bill, your property taxes, and your groceries. Physical gold cannot provide cash flow. Third, consider what happens when you reach age 73 or 75 and you are forced to take required minimum distributions from a traditional Gold IRA. How do you take an RMD out of a solid gold bar? You either have to pay the custodian to liquidate a piece of your gold at whatever market price exists that day, paying transaction fees on the sale, or you have to pay hefty shipping and handling fees to have physical coins delivered to your front door, at which point that gold is taxed at your ordinary income rate as a cash value distribution. What a mess! Does this mean gold itself is terrible? No, owning a small amount of gold as a hedge against currency devaluation is not inherently bad, but the vehicle you use matters tremendously. If you want gold exposure in your portfolio because it helps you sleep better at night, you do not need an expensive, high-fee self-directed Gold IRA. You can open a standard, zero-fee Roth IRA or regular IRA at Schwab or Fidelity and buy a gold exchange-traded fund, like GLD or IAU. When you buy a low-cost gold ETF inside a regular IRA, you get pure price exposure to gold without paying thousands of dollars in custodian setup fees, vault storage fees, or dealer spreads, and you can buy or sell it instantly with the click of a button. Here is your actionable takeaway today. Do not let fear dictate your financial moves, and never invest out of panic. If you choose to hold gold, keep it to no more than 5 to 10% of your overall retirement portfolio as a small diversifier. Put the vast majority of your money into a low-cost regular IRA or Roth IRA, divided between growth assets like index funds and safe income assets like short-term treasuries, money market funds, or multi-year guaranteed annuities that actually generate cash flow for your daily life. Do not give away your hard-earned nest egg to gold dealers who profit off your worry. Stand tall, protect your cash flow, keep your fees at absolute zero, and stay in control of your financial destiny.